Today I will be presenting a brief audio report on Laurus Labs. By the end of this video, you will get to know 5 insights which you did not know earlier on Laurus Labs. Insight number 1, product-wise breakup. Coming to the product-wise breakup, 45.7% of the business comes from synthesis, 40.2% from generic API, 9.5% from generics FTF, and 1.7% from bio. Insight number 2, location-wise breakup. The sales of the company is concentrated in the following countries. 27.9% of the sales comes from India, and balance 72.1% of the sales comes from rest of the world. Insight number 3, detailed product-wise breakup in the generic API space. Coming to the detailed study, 60% of the business comes from ARV API, 33% from others, and 7% from Unicology. Insight number 4, sales growth and profit growth. The company has a good sales growth and profit growth during the last 5 years. However, in the recent quarters, there has been some slowdown in both sales and profitability. The company registered an impressive turnover of Rs 4,936 crores in the year 2022, registering a 28.05% increase year on year. Also, profits came in at Rs 827.52 crores, registering a degrowth by negative 15.8% year on year. In the September quarter, the company registered an impressive sales growth of 30.94% year on year and corresponding net profit growth of 15.31% year on year. Now coming to the pledge and debt, with a pledge of just 0.04%, the company is on the right track. In case of a bear market, there will be no panic selling by both FIs and DIs in the stock. With a debt to equity ratio of 0.52 times, in the year 2022, the company has borrowed more funds for its internal growth. Overall, the debt to equity ratio is quite satisfactory, and the company has sufficient funds to pay its interest on time. Valuations, with a P ratio of 25.83 times and price to sales ratio of 4.03 times, the company is slightly overvalued. Insight number 5, market return. Also, the stock has generated a positive return of 295.85% compared to the Sensex, which just generated a positive return of 92.75% during the same period. If I was a long-term investor, I would definitely consider the stock in my watchlist radar. However, I would wait for the company to report good set of Q3 and Q4 numbers before adding this in my watchlist radar. For getting more such research insights and in-depth stock analysis, please join our Stocks Made Easy group. Thanking you from team testmystock.com.